Now let's get ready for another very interesting conversation, and we already have our next set of speakers here with us. So let me quickly introduce our next panel members. Our next session is on the topic of risks and rewards of investing in India's warehousing sector. And we welcome our moderator of the session, Mr. Gautam Saraf, Managing Director, Mumbai and New Business India, Cushman and Wakefield. He steers the firm's business growth, driving operational excellence and pioneering the best trade practices for businesses. In more than 15 years of service at Cushman and Wakefield, Gautam has been instrumental in growing the firm's revenue multifold with innovative service offerings for occupiers as well as investors. He is also the founding member of agency leasing business for Cushman and Wakefield in India. Let me now welcome our speakers of the session in an alphabetical order. And first of all, introduce Anay Shukla, Chief Customer Officer, Welspun One Logistics Parks. With a robust domestic and international know-how, Anay has been in leadership positions for over 18 years in commercial and supply chain management. He has been instrumental in providing customized infrastructure solutions for potential and existing clients, enabling them to unlock greater value. Our next eminent panel member, let me introduce Ashish Joshi, founder and CEO, Landmark Capital Advisors. Ashish Joshi has spent over 25 years in real estate fund management, investment banking, corporate finance, and strategic planning. With a vision to bring global investment themes to India, he founded Landmark Capital as a fund management vehicle focusing on identifying and investing in high potential themes in the real estate sector. Our next panel member is Rahul Virmani, Director Operations and Business Development at SM Logistics Warehousing Company Private Limited. Rahul Virmani is a third generation entrepreneur into the family logistics and distribution business that has been associated with all top brands like Marico, Nestle, Kellogg's, Asian Paints, Amul, Adani, Wilmar, to name just a few, and handling their 3PL businesses across North India. Under his able leadership, the organization got ISO certified and now has its own logistics parks in Haryana, Punjab, and Delhi. Our next eminent panel member, I introduce Mr. Sandeep Narayan Singh. He's the Senior Director and Head Industrial Investment Services at Savills India and has over 14 years of experience in varied roles with a flair to drive revenue and growth. He's an industry specialist with knowledge of industrial brokerage business and investment banking and has structured several notable transactions in the past as an advisor and subject matter expert for industrial investments. Our final panel member joining this session is Mr. Tapan Bhatt, Head of Investment, Ascendas Firstspace. Tapan brings with him over 15 years of experience in US, UK, and India across private equity, hedge fund, and investment banking industries. He has completed transactions worth over USD 42 billion in US, UK, India, China, Malaysia, Vietnam, Turkey, Australia, and Russia. And previously, Tapan was the founder and managing director of Toro FinServ LLP. His earlier stints were with ICICI Venture, Darwin Property Investment Management London, Mercury Partners, and Bank of America and in USA as part of their investment teams. So this is our eminent panel of experts, and let me hand it over to our moderator of the session, Mr. Gautam Saraf.
Thank you, Sapna. Quite an interesting topic and very good thought leadership that you've been able to bring together. Risk and reward of investing in Indian warehousing. Sunrise sector pre-COVID, possibly accelerated post-COVID. Whether it's risky or rewarding is something which we will try to answer it by the end of this panel discussion. I believe from a reward perspective, where we have a Make in India PLI scheme, we did hear the previous panel talking about the input tax credits or the GST being a boon or a bane from an industry perspective. What we saw from service provider perspective, one of the most unorganized market, wherein you saw capital coming in greenfield development, taking a development risk. But would that yield returns given the rents have been flattish over the last decade or so? And a lot of institutionalization. So $3.8 billion that came in over the last 5 years as of Q1 of 2022 in industrial is 12% of the private equity money that came into real estate. With that, let me open the panel with the first question to Tapan with his international experience. What's the outlook, Tapan, in terms of investment into warehousing pre-COVID and post-COVID? What's your view on the risk versus reward?
Sure. Thanks a lot, Gautam, for having me here, and thanks for the question. Um, for me, if you look at if you look at the fintech world, demonetization sort of acted as a catalyst for their growth. I think for industrials, it's been COVID. So pre-COVID, there was demand; it was doing really well as well. But I think post-COVID, it's just taken another leap, and I think it's bound to continue to grow for a while. I think where we'll see a little bit of a difference is because during COVID, there was quick delivery. We were all sitting at home ordering from Swiggy, Zomato, that had increased tremendously. People grew not planned. They took grade B warehouses. They were happy with it. They got wherever they could go. Now that institutional players are coming in, we'll see a lot more consolidation happen. And over the next phase, we'll see that a growth will be more on grade A side than grade B side, as people tend to go to bigger warehouses where they can go and start expanding to newer geographies as well. With respect to risk, I think demand side, I don't see it as a huge risk. I think at what price the demand will come is always a question. I think, and that's also because of what's going on. But we strongly believe that in a year's time, the rents have to sort of correct, because this is otherwise unsustainable for most developers. So I think that will sort of correct by itself. In terms of the risk I see is more on the supply side. Prices have gone up really, really high, A, for the land, and B, also for the construction inputs. I think at some point, once that sort of stabilizes, we'll see a bigger growth on that side as well. So supply will be a little bit constrained. Demand's going to be there. Demand at certain price for the first year or so, and then we'll see a big jump in a year's time, is what my view is.
Quite interesting. Let me bring in Ashish, because he's possibly yet to invest in India. I've been watching the space quite closely. And would your argument of rents moving up in a year's time excite him to put in the money, or hold him back given the risk of the supply side, which prices have been escalating? Ashish, your view on that side?
Yeah, hi Gautam, hi everyone. Good afternoon. So I totally agree with what Tapan has said about the growth potential. I think India as a country has all the right ingredient to make a very spicy and interesting recipe out of it. So whether we look at demography, we look at the telecom penetration, all the parameters required to make it a successful market. One, from the e-commerce side, second, from China plus one strategy, focusing on the manufacturing side. So I think I always believe, if you look around the cities which have been very, very successful, and most of the cities always had twin engines firing the local economy. Whether we look at a city like Bangalore, we look at city like Pune, or to some extent city like Chennai. And in the good or bad time, it has always been helpful. If one sector is down, the other sector has been able to pick it up. So I think there is no true argument about where the market is going to be, where the opportunity is going to be. And being in the sector since 06, when as a part of the milestone team, we had floated a small warehousing fund back in 06, and it used to be a cause of celebration when the rental used to touch double digit. 10 rupees used to be a great story. So we have seen that market, and what customer need was not really very important. What you can provide within that cost parameter became the important thing. And there was no real player to partner. So in terms of becoming the developer itself was not a choice. You have to do it any which way. But I think very clearly the risk lies in terms of how how prepared the market is to accept the higher rentals. Tapan was very right when he says until we are figure out a way to pass on the cost, it may not be a very, very sustainable business model to have. And I think we have to, instead of overreacting, possibly we have to see this as an aberration. How the prices of the raw material is going to stabilize. I don't really think the land price is going to be a very stable commodity. It has no choice but to move up. Even in the market like US, people are talking about land price moving up by almost 50%. So given the population of the country, given the limited availability of land, I think that is a bigger risk for the player like us compared to the raw material. And beyond a point, the market has to accept the higher rental to reflect the rising cost.
No, quite interesting. Let me bring in Anay, who probably day in, day out deals with it and probably finds this promising, the double-digit number that you mentioned back in reason to celebrate in milestone days in 2006. It's still the double digit. We don't see it going to the triple digit, but that double digit is definitely doubled since 2006 to 2022 now. Anay, what's your view in terms of the risk reward in this space?
So, I completely correlate with what Ashish was saying. I come from a supply chain background, and we used to be the one who used to take up a lot of warehouses. So I do correlate with that single digit rentals being a benchmark in the supply chain space for many, many years, right? Look, the demand has definitely gone up, and we know the macro factors in terms of how the economy is shaping, booming, and eventually how that is leading up to a significant demand in the warehousing space. I agree with what Tapan says, to large extent, the COVID has proven that this is the asset class which is going to be robust in terms of any up and down that happens across the economic zones, right? It could be pandemic, or it could be any other factors, but primarily, and warehousing asset class is almost like an untouchable asset class now. It's stronger, it's robust, and the more stronger we make, the better off we are generally as overall as an economy, right? So no doubt that the rewards are there. There are immediate term risks, I would say, in terms of the land prices going up, the input prices going up, and needless to say, the rentals have to shift up for a sustainability point of view, for the entire ecosystem, for us to thrive and survive and sustain, right? I was just reading a report very recently that the yields have also come in from double digits to single digits now for a warehousing asset class. That is something as a cause of worry for sure. But I think I would still say that the capital markets are looking at this asset class as very, very nascent and early to kind of form any benchmarks. So there's a lot of room for us to kind of overall grow. Eventually, I think, we've done this in Bhiwandi. We have a flagship project in Bhiwandi, and we've been able to push the rentals up eventually, not just by, I would say, as a supply demand perspective, but only by creating value also. I think at the end of the day, all of us really have to ensure we are a stakeholder in the entire supply chain process itself, as a supply chain ecosystem. And unless we create value for all the stakeholders involved, it cannot be just a passing of the price, because eventually price will come back to us as an end consumer, right? Which is not what we all want also, and which is not eventually sustainable in terms of the percentage price increase. So yeah, I think it's that's where we are. But I feel the prices will go up. It have to go up. But I think it's the ability to convince the end customers on the value that they can derive out of that price will what us eventually help us all kind of bridge this gap much sooner.
No, that's helpful. I'm bringing in now Rahul, again, similar space like you, but 3 generations, he would have seen the single digit going to double digit. Does he also feel the yields are also dropping to a single digit from a double digit, with $1 million plus up north, which is, a very robust warehousing market?
Hi. Thank you, Gautam, for inviting me. I tell you, the story of an Indian warehousing industry is over almost a decade old. It's been 10 years. The logistics player came in and then started building the grade A warehousing. So it's a very, very relatively old industry. It's very, very new industry, personally telling you. Though the last 5-6 quarters have been really tough for everybody in terms of as a developer also, because I'm a developer also and a 3PL player also. So last few, 2020 was difficult in a pandemic time. And now when the pandemic got over, the cost of the input have gone up like crazy. If you look at in last 2020, the price of steel was about 45 rupee a kg. Now it has gone to about 85 rupee and 90 rupee a kg. And 40, almost steel is almost a 40% of our total cost. So, and warehousing being a very low margin business, it's very difficult to cope up with the rise of cost in the construction. So it is very, very difficult. So ultimately, the cost has to go up, because when we started this business, I think 10 years back, I started this business, we were probably getting a return of about 12 to 14%. And now if I'm currently developing a project, it's hardly a 6.5–7% return, which has become very, very difficult to sustain. Ultimately, the pressure has to go up, but we have to create value for it. A lot of processes has to be built up in terms of the solar power, or probably because it's not that easy that client will increase the cost, because there is hyper competition in around the area. People are willing to give the rental to the space at a much lower prices. But I somehow feel that stupidity ultimately will go. The grade B guys who used to giving very, very cheap rents will not be able to survive for long in this kind of environment. So I somehow feel that the rent has to go up for sure, but I somehow still feel that it's a great time to be in the industry. The Prime Minister is saying that we're going to be a 5 trillion economy. So if a 5 trillion economy has to be there, the good has to be more, the good has to be stored. So it's huge potential in the industry. And I somehow feel that right now we are close to about 200 billion economy, 200 billion market, logistics market. So that has to go to 500–600 billion in next 7 to 8 years. And then probably next 4 years, we're looking at about 360 billion in the market. So the growth is there, the opportunity is there, but I somehow feel the land acquisition cost and the cost of the raw material, that's going to be a long-term thing. How we have to manage as a developer, how we have to pass on that cost, that has to be seen.
Let me before we jump into the institutionalization of the space or the 5 trillion economy, I'll bring in Sandeep, who would have possibly advised a lot of investors in this space. How do the investors appreciate? Is there a balance between the land prices moving up much faster than the rentals moving up? So obviously the yields are dropping. So rents are going to double digit, but the yields are coming to single digits. What are you hearing on ground in your world?
Thank you, Gautam, and thank you, Realty Plus, for giving this opportunity. Gautam, the basic thing about land prices is land is scarce, and as cities expand, you will find that tenants would typically like to live or put up their facilities closer to the distribution or to the end customer. And as urbanization increases, land values will go up. There's nothing new about it, and nothing is going to change in the future as well. What I mean, investors also, and good Ashish pointed it out, that even in the US, the prices are increasing. What you have to understand, what developers have to really do is extract more, use the land to the fullest extent, not in terms of plot coverage, but in terms of how they understand the tenant's business, and give tenants that idea of making the warehouses future compliant, future proof. So tenants can use more volumetric storage, tenants can use more technology, because if you just analyze and see, rent is just about 4 to 6% of the entire logistic cost as a percentage. There is transportation, there is automation, there's labor, there's inventory. So how developers can, help tenants to think in a future way is to give them value additions so that they can reduce their cost in the other buckets, and then can offer more rental to the developers. And as all the panelists said, rents would definitely go up. I mean, I will also concur with Ashish that I have seen those days when rents were single digit. And over a period of time, they move to $20, 21, 22. And there will also come a time, and we are discussing right now, and I mean, I don't know what time it will be, but at some point of time, a 26, 27 will not be out of the market. Okay. So, but yes, we have to give those value additions, bring in those efficiencies, which will enable tenants to offer that kind of rental. And that will really work out at that time.
Thank you, Sandeep. Let me bring in the capital providers again, which is Tapan and Ashish, wherein, you saw, if I compare it to an asset class like office, wherein commercial assets were built by local developers that defined micro markets, where institutionalization happened at the core space. In an industrial space, because it was unorganized, institutionalization happened much faster, and they took the greenfield call there. And, the land prices moved up much faster. The input cost has moved up, the steel has doubled, while the rent remains at 4-6% of the overall cost or something. Now, in an office space, if I have a 100 million square feet portfolio as Ascendas, I know that 100 million is in the top 7 cities. But in an industrial or a logistics space, if I have 100 million, it's over 25 to 27 cities. So how do you operationally manage that? It's a nightmare even thinking of it. Tapan, you want to start with that, and Ashish, you could.
Sure. So the first question in terms of the growth trajectory in that industrial has seen, right? So, there are multiple reasons for it, but we discussed that industrial over the last few years has seen tremendous growth globally, and that sort of has transpired in India as well. So capital providers that's why allocated capital to industrial, because that is what was going everywhere else. I think it made sense to do it in India as well, and we've seen that. I think second important reason is that in 05, 06, when people started investing in office assets, they were all new players to India. Now, a lot of these guys have been in India for the last 10, 15 years. For them to undertake India risk is a little easier than before. So now when they're saying that I'm taking a greenfield risk, they know exactly what they are undertaking. Previously, they had a little bit of a problem judging those sort of risks, and we know the stories of Cushman spires of the world and whatnot, right? So that's sort of changed a little bit. In terms of managing 100 million square foot of industrial warehousing, I don't think it's as difficult as the office. A lot of my parks are multi-million, and they'll be all close by to each other. So it's a hub and a spoke model. I don't think it's necessarily as difficult as office, because most of my leases are bigger leases as well. It would be 300,000 square foot, 400,000 square foot. So I'm sort of managing fewer relationships than I would have to do in office cases. So yes, it's not easy. We are still sort of going outside the cities and managing the panchayats of the world and whatnot. But I think a lot of us are sort of learning on the way too. I think it'll be easier.
Ashish, what's your view when you invest in this space, and where are you investing?
Yeah, so one is definitely, if you look at the history of investment into India, the overseas capital started coming in 04, 05 in a big way, and a lot of that was coming either into residential or into the IT sector. And IT sector had a history even before the real estate money came into India, because the sector was well established and globally well regarded as such. And because of that, people can really predict what's really going to happen in the IT sector, and that it turn in going to happen in the IT assets in India. And 08 change a lot of things. There were very few people like Tapan who were still taking a developmental risk even during those days. Otherwise, most of the capital was moving towards kind of a risk-free investment into the core assets, and still they found the volume, because that was the only investment grade or institutional grade real estate in India where you can deploy a chunk of capital. And we as a milestone, we had India's first private REIT like a structure investing into properties in a big way. And we have seen in front of our eyes how 08 happened, and a lot of big capital was coming into India. And during that time, warehousing as an asset class was not really that well established, or the argument in favor of investment were not very, very compelling for someone who wants to put in or write a $1 billion check. So, as Tapan said, I totally agree that last 10, 15 years, investors have also developed a lot more confidence in the India story. A lot many good things have happened. A lot of structural reforms, have also, been able to, clear unwanted, noise in the system. And gradually, people have realized that, after US, China, India are going to be the largest market in terms of the e-commerce, or in terms of the warehousing as an asset class. And because of the confidence what they get over the last 15 years, taking the developmental risk for them was much more easier. And that is why we are seeing the kind of money which is coming into India. And one very important thing from our own experience, many times as you establish the tenant relationship, the tenant themselves may want you to come to a new city. Okay, so it's the extension of relationship which happens. You may not have a plan to go to Guwahati, but tenant may want you to come to Guwahati. Okay, so that also is part of the strategy when you are expanding into new locations. And to an extent, when you are able to de-risk the model when the tenant is there, it also changes the way you want to look at a new city in terms of capital deployment. So I think cutting the long story short, people like us will go where we find the opportunity. Of course, we have to look at what is the bandwidth available and what's the capital available with us. But again, I think the driving factor for us is the kind of money what can be generated on our investment.
No, thanks, Ashish. Very fair point. You will go where the demand takes you, or where your relationship client wants you to go. Again, bringing in Rahul and Anay here, which possibly would have experienced this, that how far would you go in terms of acquisition and servicing your tenant? We saw markets like Bhiwandi moving 35 kilometers away. We saw emergence of Palava from a location strategy perspective. We saw Sona emerging in North India perspective. So tell me, Rahul, is there a paradigm shift in selection of criteria from our parameters, which we saw 5 years ago than what we see today?
Gautam, I'll tell you, I think GST came in about 2017 and B. So companies started rationalizing, and the warehousing needs based on their policy, the logistics merit where they wanted to go, they started consolidating it. So that move, what happened, they moved from a major city to about 30-40 kilometers from a city to serve that city. Like in Delhi, they wanted to serve either from Sonipat or from a Gurgaon. So that's a 30-40 kilometer radius. But now in the last 5 years, the cities have expanded, the residential have gone there. To invest in a warehouse, it's become very, very, it doesn't give that kind of a return also. And the land prices have gone short up like anything. Even earlier, the land prices were close to about 1 crore rupee an acre. Now the land you get for 3.5 crore rupee, 3 crore rupee an acre. So that's become unviable to construct a warehouse now. And then what happened is, then you move 50, 60 kilometers far, like a Farooq Nagar or probably a Jhajjar. So what happened is you get a bigger chunk of land there at a lesser price. So the viability, the yield increases. But what the important thing you have to see is that a government is doing a great job in creating the highways. Probably the road connectivity to the major cities are improving like anything. That's hats off to the government, and Mr. Gadkari is doing a fantastic job in that space. And then you have to, when you move out of the city, you have to see that how far I can go, because you have to create an ecosystem also. It is not about constructing a warehouse. You need the entire ecosystem to go with you. You need the transport hub has to be close to you. You need that, the labor accommodation, the how staff will come, how far the staff, how the transportation, you have to manage that. Staff has to come and go at the night shift. Because now e-com is a 24-hour industry. So a guy can order at night. So probably you need to work in all 3 shift operation. So that has to be seen. But ultimately you have to go too far from a city, because that's not viable now to be in the 30-40 kilometers. So ultimately you have to go out, and e-com being the biggest, somehow the consumption, if you look at the share of the e-com in the transaction, it's close to about 30% in the total space absorbed. So e-com will be the biggest driver, and they can service from a far off area, about 30-40 kilometers. You have to go, ultimately far off from there. So I somehow feel that the tier 2, tier 3 cities we have to be bullish on that, because with the greater internet penetration, so people are, and the BharatNet coming in, the government is planning to give fiber net to probably all the villages. So the demand will come from those cities also. So we have to go for the far off cities also. So I somehow still feel that there is a lot of demand will be there in tier 2, tier 3 cities, and you have to go from the major cities far from, because ultimately it will become unviable to do business. You can't buy land at 3.5 rupee an acre and develop land at such a cost and then expect the yield to be there. So I somehow feel that you have to move almost far from a city now.
Anay, what do you think? Are you as bullish for tier 2, tier 3, or is it the major city as a strategy in the e-commerce space for you?
Yeah, I mean, look, as far as going a little far off from the city, I think it's a subset of, like Rahul mentioned, the road networks getting better, because warehousing, I mean, we were just talking about warehousing cost being about 4 to 6%, maybe at the max 10% of your overall supply chain cost for any tenant, right? Yes, the manpower cost is a big chunk, but generally what happens is you start creating a new cluster in a new micro market, and the ecosystem eventually starts getting built out of it. It's only a matter of time till the time, you maybe the first entrant as a developer or as a tenant, you always face a little bit of issues in the first few, maybe a year or two. But eventually it gets sorted out, because as a warehousing hub and cluster starts getting developed, the ecosystem around the labor availability, the trucking environment, everything starts falling in place. And I think that's exactly how we build out micro markets. As developers, we should be really kind of pushing that hard, because if you keep fighting in the same micro market, like Rahul mentioned, we will eventually start pushing the land prices up, start becoming unviable at the yield. You're taking a hit on the yield, or you're taking a hit with the customer because your rentals are going up. Either way, creating micro markets is definitely something in an existing, or the tier 1 markets is something that we all have to collectively do. Coming to tier 2, definitely very, very bullish, Gautam. I mean, tier 2 is your consumption as numbers might still be lower compared to the tier 1 micro market, the top 8 cities. But if you look at the percentage growth that we are seeing in tier 2 is much significant compared to the tier 1 micro markets, right? I mean, tier 1 cities. And I think that trend will continue, because we are still, you look at the e-com penetration, I mean, many reports are barring the COVID spurge, and we should be kind of in a way happy for that. The e-com penetration, what was supposed to happen by around 25, 26, has actually hastened, and now we've already reached those numbers, right? So we are ahead of the curve in terms of at least 3 to 4 years. Now, obviously, the physical infrastructure is not yet supporting that. So there is definitely a lot of bullishness in that tier 2 market to make sure that the penetration impact that is happening on the internet is actually getting translated into the physical infrastructure in terms of the warehousing. So tier 2 definitely, and I mean, I agree with what Ashish was saying. We follow our customers wherever we go. I mean, my customer is absolutely a king for me. If he says, boss, I want something in Guwahati, we want something in Coimbatore, absolutely happy to look at it, because your risk is minimized. You have an anchor client you want to go with, and tier 2 is definitely the way where, I mean, it's supply demand, right? If you're talking to your customers and everyone's asking you on all, what do you have in a tier 2 market, that means everyone has started to focus on that market now, on the cities. So definitely very bullish on that.
So let me come back to the city when we went far away or something. Tell me, where do we see that demand going in? Of course, it's been exploding in terms of in-city warehouses as a demand, and obviously there's no availability of land. So would you retrofit existing grade C buildings which exist in terms of workshops or old warehouses or industrial sheds or office blocks also? And of course, this is an open house, and Anay, maybe you can start from that also again, in terms of what would be the strategy for the in-city warehouse demand that has been seeing a phenomenal growth over the last, I would say, 2 years.
Right. So you're absolutely bang on, Gautam. I think in-city is next big phenomenon other than the tier 2 that we're exploring. Again, as a developer, we're very bullish on it. We've invested heavily in terms of our time and effort on really kind of conceptualization and bringing that as a product. There is a lot of, I wouldn't say gray area, but a lot of unknowns right now as to what should that product be. For example, when we define a grade A warehouse, we know what a grade A defines, right? I mean, we're talking about the top 5-10 parameters, which kind of tick off and say, hey, that's a grade A. That is not available for an in-city today. So there's a lot of gray area. And we all, again, it's a collective effort to kind of, as an industry, between we as a developer, client, customers, construction partners, everyone to kind of get there. Retrofitting is a short-term option. Yes, I mean, it's kind of, but if you ask me whether that's a long-term solution, I don't think so. At some point of time, that retrofitting still is going to lead to a lot of limitations from a supply chain point of view. So as an end tenant, you're still going to be constrained. It's a better set than what it was in terms of the current infrastructure. But is it the best one for you to derive maximum value out of it? Probably not. So definitely retrofitting is probably more of a short-term phenomenon, I would say. But long-term, if the in-city as a concept has to, because in-city is going to be very expensive, right? I mean, we are all talking about the cost of land, cost of construction, all put together. So for you as a tenant to be able to derive value out of it, that structure has to be robust enough for you to be able to do that.
Tapan, any views on the in-city? Because, I mean, while I understand what Anay is saying, but it's a very difficult proposition to manage without retrofitting, right? Because exorbitantly expensive land. And with the emergence of, and I won't diverge there, but I'm saying with the emergence of data centers coming in city to reduce the latencies, land prices have become 3 times even for an office developer now.
No, absolutely agree there. But with Anay in this one, that you know what, there are restrictions when you try to retrofit something. It is not going to be 100% efficient and as you would want it, right, for your clients. At some point, we have to see that, you know what, we are competing against office. We can't compete against residential yields for sure. Now we are competing against office for rental yields. I think rental yields are there. Now what we need to say, how much can we build on a particular square foot and what sort of rentals can we make on it, right? So not an easy one. That's why I think a lot of us have struggled to sort of come up with a in-city warehouse for now. All of us are grappling with it. Hopefully we'll get there. But what I would bring in to the previous conversation that was going on about tier 1 and tier 2, we somehow get fixed with the tier 1 and tier 2 definition as per what the office market is doing. Absolutely. Tier 2 for industrial is very different. Tier 1, most of the cities in India, tier 1, look at the number of people that we have in each city. More than 1 million, 1.5 million, actually a few million, right? 10 million plus. So in that case, those are all tier 1 cities for warehousing. So we should concentrate. There is a lot of supply requirement over there as well. So tier 2 cities, as per office definition, is a great opportunity. In-city warehousing is an amazing opportunity. It's just very, very tough to find land. We'll have to compete with residential. We'll have to compete with office. We'll have to compete with hotels. We'll get there someday. Today, it's very difficult.
Rahul, up north, any experiences? I mean, where you've been going further out or you've been trying to come in basis your customer demands?
It's with me. Yeah. You know, the constant need to reduce the delivery timelines, as there's a pressure on a logistics company like this. It has to be a shorter supply times, and with the e-com companies guaranteeing the same day delivery, some hourly deliveries, and then the easy return policy. So you have to look at a shorter supply time. So you have to go into an in-house city for a warehousing to manage it, because from an outside you can't manage it. But you're finding very difficult to get into a city warehouse. And reason being of that, first is the high rental, and the second thing which is now affecting is that people now have seen the compliances when you've gone out, the grade A warehouses, the flooring, the fire NOCs. Now, when you go into a city, it's very difficult to get those kind of compliances, the fire NOC buildings, or probably the which has a warehousing approval. So it is very, very difficult to find that kind of a property in a city. So and if you have that property, which is very, very limited in number, and then if you are going to find them, the rentals are too much. You know, it's very high for any company to probably to take it. And turnkey projects, I somehow feel, you know, you have defunct factories or probably the mills, which are old mills in the city and the factories. So you can convert them, but it's difficult to work out of them because they are in flows, and then probably you have to put up lifts and do things. It is difficult to work out of them, but eventually you have to find a solution to work in a city, because ultimately you have to come out to the outer of the city or somewhere else. But city demand, the demand is there, that's for sure.
Interesting. I'm given it's an alternate asset class. Let's go into the alternate investment fund from an AIF perspective, and maybe Ashish followed by Sandeep could share some views that how do you see AIFs in the space? And of course, I would want Anay to speak for sure, given Welspun already has one there. Ashish, if you could give us some perspective for the investors there.
I think definitely purely from the domestic capital perspective, Gautam, there's a lot of interest because one, for the domestic investor, there is no product in the market which can help them to participate in the warehousing story. So I think purely as a domestic capital provider, there is money available in the market from the AI perspective. Now it's a question of what kind of thinking the investor may have. Some may want to have the rental assets, or some may want to come into AIF purely as a financial investor. It's the choice of the investor, whether he wants to be an active investor or a passive investor. We always believe, seeing the past experience. It's very easy to buy asset which is generating a rental income. And then going forward, trying to manage the asset. That is one part which is, generally getting ignored by the investor. So, our advice to investor always has been that unless until you have the capability of managing the rental portfolio, don't get into it on your own. If at all you want to get into, then you have to have a proper ecosystem available. Because the main issue always has been the how do you handle the releasing risk of certain assets. So from that perspective, I think gradually investors have become very smart. They are exploring. I mean, people are investing in crypto, so why not in AIF for the warehousing assets? So great amount of interest from the local investors.
Sandeep, your experience, because a lot of investors burn their finger when a lot of warehouses were strata sold.
Right.
Via NCD or even a pre-lease, like Ashish was mentioning, where after vacancy releasing was impossible. They realized the land was agriculture in nature, right? And we all know such cases.
Right.
The Varagi had to be paid, and they didn't know how to manage that. What's been your experience in these?
Yeah. So what I've seen is, and continuing from what Ashish said, investors nowadays are quite aware, and they understand that having a professional working for them and they only holding units as a financial investor has its own benefits. And they do a lot of background study, even, I mean, going as far as trying to evaluate the options themselves before going to the AIF to invest the money. So what they do is they understand this risks very closely. They take professional advice, and AIF. I mean, hats off to Welspun. They have done it very well. I'll say this is something that most of the new investors, and what we are seeing is the current crop of investors who are coming up. They are typically the new age investors, and they do learn a lot from abroad as well. And they use the same experience to invest in AIFs. And a lot of these investors, they also understand that holding the asset, holding a quality asset requires far more capital than what they want to invest in one go. So AIF gives them that flexibility to invest, hold units, learn the business. And sometimes some of the investors actually graduate from just being unit holders to actually holding assets later. Okay. That has been my experience.
Anay, you've been in this, we've been getting compliments for the AIF that Welspun did. And I think, thanks to, kudos to you and Anshul and the team that's been able to raise money in this space. What's been the experience? What are kind of questions do these investors ask generally when they were looking at diverging into industrial asset class?
So I think, partially to a large extent, what Sandeep was saying is true, that today, or maybe till about a couple of years back, you didn't have a lot of option of investing into this asset class, right? I mean, you can still get into a grade A office or a resi space or a commercial unit, because the ticket sizes are much smaller. today, I mean, you'll have to look at warehousing where on one side the tier 1 cities are exploding in terms of ticket sizes. When I say that a standard, a big warehouse in Gurgaon or an NCR till about 3 years back used to be a 2 lakh square feet, used to be a big warehouse. Right? Today, 2 lakh is a very standard warehouse. If you're talking about 5 lakh plus, then you're talking about a bigger warehouse. So the ticket sizes is going up, which is furthermore making it as an individual asset class owner, making it further more difficult. So yeah, the AIF gives that option of holding the asset class in terms of a smaller ticket, smaller risk, manageable appetite. And I completely agree with what Sandeep said. There are a lot of investors who've done where they've experimented with AIF, gotten used to how it's done, what's to be done. And then now they're willing to kind of look at a more bigger ticket size in terms of saying that, hey, I'm willing to look at one particular building in a park, gradually moving on to that. Proactively from our side, we have been extremely proactive with the investors in terms of what has been happening with that money that they've invested. And that's a very, very important aspect of investor stakeholder management. So when we're looking at land parcels, I mean, obviously we do have the investment committee checks and all those things. But in terms of the progress of whatever the land that we're looking at exploring, we're doing, or existing land also, what kind of progress is happening on this site in terms of the construction updates, even during COVID, what was happening, how we were doing it. So there's a lot of information back and forth that helps us. I'm not saying assuage any fears, but there is a little bit of anxiety with the first-time investor that will always be there. So what's happening with my money, right? I mean, what's happening? It's not just the returns that matters to them. It's also the interest in terms of this asset class. So that information flow helps us really kind of build that trust and keep them informed about what's happening with the asset class.
Quite interesting. I mean, just digressing again, and Tapan bringing you in here, what's the new phenomena in terms of trends that we could expect in the future in the warehousing space? We've been hearing terms like cold storage, dark stores, just some perspective on that.
I think for India right now, it's actually latching onto the low-hanging fruits. The low-hanging fruits today is the in-city warehousing. Definitely people are going to go that way pretty soon. We are all looking at it. We are all trying to explore, and hopefully we'll get there soon enough. Secondly, is to actually have warehouses in tier 2 cities, which is going to be the trend, which is everyone's exploring, and that will happen very, very soon. Within that, I think the e-commerce is just changing the game every day. I don't know what's going to happen. Maybe dark stores happens. It's just nobody knows. Maybe let them figure it out. Let Blinkit figure it out. Let Zepto figure it out, and maybe they'll tell us what needs to be done. We are here to provide a space for them. So, but I know for sure in-city and tier 2 is a low-hanging fruit that all of us are trying to latch on to.
Rahul, just your perspective, one on this, and second, do you see, because you do a lot of value add 3PL space, that like the shared economy that's been emerging in all other asset classes, right? Whether it's a co-living or a co-working and many others, there is a shared economy emergence even in warehousing space?
Yes, I somehow feel you will see that in future, the building asset and services will help us in differentiating the warehousing. The warehousing plus the transportation, or probably the 3PL with the transportation. Companies wanted to work with one-stop solution. So me as a landlord, me as a service provider, give them a little, it's given them an authority and probably a one-point contact to one stop to speak to and for everything. So that becomes an easy for them. And to me, as well as a logistics company, that gives the better profits or better margins if I give us an entire solution together as a 3PL. So that's going to be there, and I think there will be a lot of shift from grade A to grade B to grade A warehousing with better efficiency and adherence to all the safety standards and the compliances part. That's going to be there in future, and I think there's a lot of demand which is coming to us from a cold chain also. Because the e-com with the food retailing organized is coming up, the e-com. So there is a lot of demand for cold storage. And cold storage as an industry, you will only have 3, 4, 5 fragmented players. Otherwise, as an industry, you do not have much investment in the cold storage. So that can be a big thing. Government is driving in. They're giving you the subsidy to take it forward. So in a state like Haryana, if you look at, so you don't have to take a CLU to set up a cold storage, which otherwise if I have to set up a cold storage, it is very, very difficult. It's a normal warehouse. It's very difficult to get a CLU, then a building plan approved, then a fire NOC. It's an entire, probably a year and a half process to probably get the things on the track. So there'll be a lot of things. I somehow feel that there'll be a lot of demand from the cold storage, and the business and services the warehousing and services will get promoted.
Quite interesting. Just being cognizant of the time, why don't we end with the outlook and probably a one takeaway from each one of you in terms of, is this space, is the risk worth the reward when it comes to warehousing in India? Anybody could go in first. And Rahul, you want to? Yeah, sorry.
I somehow feel it is the time to get into as early as possible. It's get to into the industry. It's better for everybody because the cost is increasing. So you have to be on time. So once you miss a bus, it's difficult to catch that. So it's an amazing time. There's going to be growth for next 15, 20 years. So there's a runway of growth. So it's the best time to invest. I somebody feel that I know but it's a short term, the commodity prices, and it's a short term impact. But ultimately, in the longer run, I somehow feel it's the time to get in. But as early as we can get in, it's the best time, personally getting in.
Can I go, Gautam?
Yes, Sandeep, please.
Yeah, so I just had a very interesting metric. So if you see the REITs performance in US from 2012 to 2021, the highest returns have been given by industrial REITs, which is like almost in the range of 15%. Whereas the closest next one is equity REITs, which is about 12%, followed by office space REIT, which is at 9%. My point is US being the gold standard of industrial real estate, I mean, the developments there, even if we are able to achieve 50% of it, and given the domestic consumption that we have a very good opportunity which we need to encash. And given that warehousing and industrial cater to the secondary sector, and that is the sector which has the largest opportunity in India, I think everyone, I mean, most of the players here should give it a very good and fair chance, and we have a good chance at it, right?
Excellent.
Yeah, I think taking from where Sandeep left, achieving 50% of what US has achieved will be like a Diwali every day. I think that will be the best case scenario. But I think where US is consuming almost like 100 million square feet every quarter, and we are at what 30-35 million square feet. I think even if we achieve maybe 20% of what they have done, could be a fantastic story. But just digressing on the new phenomena, the buzzword, words sounding very glamorous, dark stores and all. I think we have to be a little skeptical. As a team, we are skeptical because we just don't understand the business model of the company providing the quick, delivery. I think so. Having anything built around what people are doing in the market is not going to be very wise thing, because their own business model is very, very suspect. So we are happy not to be the first mover. We would like to wait and watch how the business model of those companies are going to emerge, because these are all in-city assets, and they are not going to be very cheap to build. So we don't want to build anything which I think doesn't have a very strong long-term revenue profile for people like us. So as a player, definitely core warehousing space, pure vanilla warehousing space. A lot of things is going to happen. EVs, in my view, is going to be the next big opportunity for drivers of the warehousing. So that's where I think we are going to stick around and play the game.
Interesting. I think we probably addressed the question towards the supply chain rationalization, which would lead to justifying the cost increase even if you move further up. Tapan?
Sure. Thanks, Gautam. So in my opinion, so India, like most of the industries, we are starting from a very small base. There's a lot to be done here. We are just starting out. It's a great time to be in industrial globally. India, even more so. There's a lot more to do. I think as funds, as developers, we just need to keep making sure that we keep our heads down and make quality stuff and make sure that, governance is very, very strong. One thing that I really want to put out there, we are going and developing agricultural lands, going into hinterlands. Let's make sure sustainability is a part of it. Let's bring that on board. Let's make sure we use solar energies. Let's make sure we use proper water. Make sure there is enough employment for the local people. I think that'll be a big role that we'll play in this country for future growth as well. So I hope that all of us over here do play a part.
Thank you for bringing in the ESG, which was quite relevant, and I think this industry could adapt the fastest given the consumption story. Anay, I think last but not the least, your views on it.
Thanks. So yeah, I mean, I completely agree with views our panelists have been, kind of mentioning. So from a demand perspective, I think the warehousing is the backbone of supply chain, and supply chain is basically the backbone of the economy today. So needless to say that, this asset class as a sector is only going to go upwards because we are just scratching the surface. Whatever we've seen as an institutional or a graded development that's happened in the last 5 years is zilch compared to what the developed economies are at, right? So while the economy grows at the pace that it's meant to grow, this infrastructure setup has to grow at that pace. And we've seen that with roads, that has to be followed with the warehousing sector. No, absolutely no two ways about it. I completely also agree, and I think it's a very important social aspect from an ESG perspective. Warehousing is going to be the largest consumption of steel and cement, which is anything but green. So I think it's our social responsibility for all of us collectively to ensure that in whatever way possible, we bring in the ESG aspect. So we've been very, very cognizant about recycling steel or cement, use the solar powers, harness that solar, wind energy, renewable energy aspect of it. And obviously, I mean, needless to say, the employment aspect, that's what I was saying some time back, that the farther we go from the main cities, the more employment we are generating, because a warehousing hub actually creates a lot of allied ecosystem in that particular micro market. And I think over a period of time, the more micro markets we eventually develop, the more employment opportunities we start developing across the country.
Quite an interesting, I have like pages of notes that I could make while I was talking to all of you, and it's been very, very interesting. Sapna, you could come in if there are questions, but otherwise, just to probably throw some cues basis, Tapan spoke about the quality assets would lead to the quantity in terms of rentals moving up. When you throw in grade A from grade B, we had Ashish just spoke about the consumption story, the China plus one as a strategy, which is the milestone story, which I think everybody will take back that first time when we saw the double-digit rental returns coming in. Anay has been obviously very bullish, and I couldn't agree with him more that while there was a pandemic or something, this was recession-proof, and pandemic proved it to be one of the most fastest-growing asset classes. And I think Sandeep topped it up with the data point when he gave us a comparison to the US REITs of industrial versus equity, followed by office. So obviously, the highest return on investment perspective. Rahul obviously gave us a perspective on the input costs, which have obviously been hurting the industry per se, where the rentals have to move up to justify and sustain it. And probably the best time to be in this space. I think a lot of it, including the ESG, the GST-led rationalization happening, the misconception around what tier 1, tier 2 for other asset classes means versus an industrial asset class. The private equity, like I mentioned, $3.8 billion, and it's been continuing to grow per se. So 35 million square feet consumption, where Ashish said would possibly grow at double-digit numbers to get to where the US is, and I think all of us remain bullish. So it's a great space to be in. So the risk in this industry is definitely worth the reward that we all looking forward to enjoying.
Well, that was a wonderful summarization, Gautam, of the entire conversation that we had. And like what Anay said, that warehousing is the backbone of supply chain, and we did experience that during the pandemic, when the supply chains were disrupted, and the need for warehousing or the requirement of warehousing was recognized. So one question that we have is, what are the top challenges for this sector? We have spoken about the infrastructure. We have spoken about, earlier sessions about the land pricing, fuel and commodity pricing. In terms of investment, what is the biggest challenge for this sector? Gautam, starting from you, what is your perspective on that?
I think, as all have been saying, and they maintain it, the biggest challenge is that pay us the buck for the capital that we deploy there, right? So while we see the multi-billion-dollar valuations of the e-commerce and the industrial revolution with the PLI schemes coming in from the government, that's not consummating into the rental that the occupier is willing to pay, while the cost of rental is in single digits compared to the overall business cost. I would feel that would be the biggest challenge that the industry faces.
Okay, so the gap between the rentals and the requirement is what is one of the biggest challenge. Anay, what do you have to say? What is the biggest challenge in terms of investment for this sector?
So look, I think when we are looking at capital markets investing heavily into the space, I think one of the biggest challenge, along in addition to what Gautam is saying, the land buying is obviously a very tricky job in India, right? I mean, it's quite complicated as a process. So land availability is one key aspect. But the second most important thing is logistics has to be identified as a sector, right? I mean, which is going to eventually help warehousing get these approvals very faster. The approval process is something which is very complex today and varying from state to state. It's a very complex process basically. So there are states where you can get approvals to start a construction in say a matter of 3 months, wherein there are some states where it goes up to 6 months or 9 months also. And what happens is you're deploying capital which is sitting idle or locked up for a matter of 6 to 9 months before you start the construction. So the yields are basically stretched now to at least 9 to 12, 15 months before you start generating revenues on it, right? So the standardization of that is something very, very important across all the states. So that's, I think the government stepping in here should be very, very critical for the sector for us to grow at the pace which we are all wanting to grow.
There's a standard guidelines across the country, probably something which can help the sector. And, as you mentioned that the investment, the capital that an investor will put, that becomes very critical for that period of time till the time approvals come in.
Absolutely.
Mr. Joshi, you mentioned, do not follow the trends. Wait and watch, study the market, and then invest. So, as an investor, the biggest challenge that you face, if you're, when you're looking at a warehousing.
I think definitely, taking off from Anay, that is the biggest, gap, when we are looking at investment, assuming that, you are willing to take the risk at the land level. Okay, it is the approval which is an unknown animal. Which is going to bite us. There's no easy way out because, approval has been the state level subject. And, at, some level, whether it is the part of the Gati Shakti project or, any steering committee at the government level, where, one of the biggest beneficiary of the whole infra built up is going to be the logistics. A device formula where the approval process becomes standard across the country, and recognizing the need for rolling out a solid logistic backbone, whether a defined time frame can be put in terms of approving the project for the warehouses, because it's somewhere that appreciation of the fact that ultimately, unlike the commercial real estate, where it is still dominated by the local developer. Okay, so they have their ways and means to get the things done, whereas in case of warehousing, it is all institutional players. Okay, so they don't have the same muscle power compared to what the local player has. So we have to look at the industry in a different way, and government has to come out some sort of, I don't know what it could be, a formula whereby knowing the fact that these are the sophisticated global or domestic players who may not have the same ways and means to get the things done, and there has to be a separate formula, medicine, whatever it is, to get the things moving.
That's right. Hopefully, we'll find that formula, in some time. But like you rightly mentioned, maybe a fixed timeline, if it can be there for approval, that could also be a big help. Tapan, you mentioned that we are just starting out. Warehousing still has a lot of potential of growth. So, in terms of investors, the risk they are looking at, or the challenges that they are looking at, or as a warehousing player, the challenges they face for investment.
So I think the biggest thing that I think all of Anay, Ashish, and Sandeep have mentioned, that regulatory issues are going to remain, and that's the problem. And a little bit different point of view to you, Ashish, where I think being institutional players, a lot more coming on board. Maybe we sort of form a board like a Credi to go and speak to the authorities, because we might have a bigger cloud than an individual developers, right?
Totally.
So I think that is what we need to sort of, large developers, large fund managers, we need to come on board and say, hey, what do we need from the government? And then as a entity, go to them and say, hey, this is how you can help us, and this is how we can grow together.
That's a wonderful suggestion. I think, like, have your own body probably, and put to, forward the suggestions on what the industry needs. As other speakers have mentioned, it's a backbone of the economy.
And we are only growing. We've just started growing. So I think we are not organized right now. We need to get organized. I think we will get there in, let's say, a couple of years' time. Right now, maybe, some of us will sort of come together and think about it.
Tapan, we need to have a separate con call.
Definitely.
Sandeep.
So what Mr. Bhatt is saying, that the sector itself needs to get organized. It is still fragmented, and with now institutional players coming in, probably we'll see it in a couple of years. Rahul, how do you feel? You are on both sides, from the logistics and on the side of warehousing. What are the challenges for investors in this sector?
Personally telling you, as an investor, the biggest challenge right now is to invest in the right quality of land, which is very, very difficult to find, because a lot of land is being locked in the personal, family, legal tangles, the partition problem. So a lot of land is being, people want to sell it off, but there are some problem with the partition of the land, which the owners are not able to sell it off. That the government has to sort that out, because that's a very long process. If you file a case with the Tehsildar, it takes a long time to get it partitioned. So that's something the government has to come out of the policy with. Second thing, I somehow feel that the government has to come in now to control the prices of the cement and steel. So that's going out of the roof, because that, if not controlled, it will become very difficult to manage, or probably invest in a warehousing. That's something there. And then the problem comes with the approvals. A lot of other panelists have suggested that to get an approval, the CLU, and then once you get a CLU, then a zoning plan is approved, then a building plan is approved, then a fire NOC, then a completion certificate, which takes a lot of time. And though governments have made the portals, and that they're saying that we've done everything online, but it is still, the file moves manually from here to there, and it's very difficult to get that managed, because if you need a lot of people to get it through. So that, I think that has to be regularized. So these are the three biggest challenges I somehow feel we're dealing with it right now.
Okay, so too many loops that one has to go through, and that kinds of detters the investors, and smoothing of all these factors that you just mentioned, from availability of quality land, the cost, and also the approvals. If these can be smoothed out, I think it will become much more attractive for the investors. Sandeep, your last words on what are the challenges for the investors in this sector?
Yeah, Sapna, so I think most of the panelists have already covered a lot of points. I just wanted to touch upon one subject which Rahul briefly mentioned. What happens? You are waiting for a lot of FDI investors to invest, and FDI investors, due to whatever government guidelines and policies, can invest through certain structures. Okay. Most of the asset holding, most of the land holding is not ready for getting FDI invested. And we spend, being in this field of advisory, we spend a lot of time investing the original asset holders to move to structures which would be compliant, or which would be feasible for FDI investors to come and invest. Okay. And that takes up a lot of time, and actually that also leads to a lot of those investments not happening. And Tapan will also agree to the fact, because a lot of these assets, that opportunities that we bring to global players are typically held in partnership firms, individual names. That leads to a lot of leakage in terms of stamp duty, registration cost, and all those things, which would give better valuation to the original asset holders. Okay, so that I feel is one of the key challenge that institutional investors face when they go out to buy industrial or logistic assets.
So again, land again becomes one of the biggest factor in the entire, the number of challenges that we had discussed. But let's close this session on a positive note. The rewards of investing in warehousing. So Gautam, again starting with you, the reward, one word, the reward of investing in warehousing.
I'll just take you from what Anay said, that I think one of the most recession-proof asset classes, pre-COVID, during COVID, and post-COVID, right? So, yes.
Okay, fantastic. Most recession-proof sector. Anay, your one word for, the reward of warehousing.
Very bullish. Very bullish. Extremely bullish.
Okay. Yes, we all know it's a sector that is just starting out, and it's got a lot of potential of growth. And given that e-commerce is it's on fire these days, Mr. Joshi, your views, the reward of warehousing sector.
I think definitely, Sapna, we are heading towards the scenario what is there in US now, where there is more demand and less supply.
Yeah,
and that's why the rentals are going up there almost 10%. So right. I think we are going to be in that situation. Now it's all a matter of who is able to execute well in the market, the asset, rentable condition.
20% of it's going to be Diwali for everyone. So fantastic. Tapan, the reward of being in this sector.
The baby is just born. It's 5 years old. It has its full lifetime to go. The best years ahead. I think it's going to be very good over the next year.
So the fun is in to see the growing of this baby,
Definitely.
Yeah. So Rahul, what do you have to say? What's the reward of being?
I think I've been bullish
on all the challenges.
I've been bullish on this sector from the day one. I think I'm into the industry. It's a family-owned business. So but otherwise it's the best time to be in, and it's a runway to growth. Imagine right now the e-commerce delivering close to about 100 billion, 1.5 billion packets a year in 2020. We're expecting to billion in 2026. So imagine the kind of growth we have in the sector. So it is humongous. So I think it's a time to invest personally.
Immense potential, and this is the time to invest in that. Sandeep, your closing remarks. What's the reward of this sector? You are a veteran of this industry.
Yeah, so huge potential. You can't ignore it. And if you are in real estate, you need to be in warehousing and logistics. That's what I would say.
Okay, so if you are in real estate, better be in warehousing and logistics. So that's what our panel members have to say. Thank you so much. Yes, we realize that a lot needs to be done. What Tapan and Ashish probably are going to discuss later on separately is forming a body for this segment, and so great session, great takeaways from this discussion. Thank you, everyone. Thank you, Gautam, for stepping in and moderating this panel so efficiently. Thank you, Anay, for joining for this discussion. Mr. Joshi, Tapan, being here with us, and Rahul and Sandeep for being and sharing your views here with us today.
Thank you so much.
Thank you. Thanks, everyone.
Thanks, everyone.
Thank you.